Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really pretty big shock on the latest jobs data coming out of the US. It was expected to be around a plus 190,000, came in at plus 517,000. Now that's obviously a big jump and does potentially sort of pose a few questions for the Fed, because certainly the Fed has come out now and seen that the recent data has shown that inflation is certainly waning and is certainly on a downward path. And indeed, recent commentary from a Fed Chair Powell, who's also come out and said that while inflation is easing, still sees the need to keep interest rates high and potentially further hikes down the road. But obviously with inflation falling, but the economy is still pretty strong on the back of that job number, it will be interesting now to see whether the Fed does pause at its next policy meeting. Because with the target rate of sort of 4.5 to 475, most people are looking at a peak of around just over 5. Pretty much most of the heavy lifting has already been done. Also, as well, potentially the Fed needs to sort of, maybe just pause and see the effect of the recent rate hikes on the economy, rather than just sort of rushing in and potentially over tightening. Now, what we did see last week as well for the first time was mortgage rates in the US fell with a 5 handle now. Before that, they'd all been sort of 6 plus, but last week they did actually fall below that 6% level. Now, on the back of the jobs data, a pretty big jump in the US 10-year. That was trading sort of 340-ish. That's popped up now to 367. A little bit of a pop in oil as well. That's currently around sort of 77 bucks a barrel. But really sort of straddling sort of plus or minus sort of $5 from that sort of 80 level. Now in the UK, as expected, the Bank of England did hike rates by another 50 basis points. Taking the base rate to a 14-year high of 4%. But more interestingly, they sort of backed off on where the sort of peak rates would be, now indicating maybe sort of 4.5 to 475, which is obviously not very far from current levels. Because the economy has shown remarkable resilience and even a little bit of growth showing in the last couple of months' data. That's all against the backdrop of continued industrial disputes and industrial action out there, and I say it's just going to be interesting to see how it plays through in the next sort of 3 to 6 months. Now, inflation also fell in the Eurozone as well. That was back to 8.5 from 9.2. But as expected, the ECB did increase interest rates by 50 basis points. Taking the target rate now to 2.5. But also as well, they made comment that potentially they're starting to see an easing on the supply chain issues, which obviously a major boost for the not just the European economy, but the global economy. Now in Australia, the Australian share market put in a fresh 9-month high. And that's despite that rising inflation, and the Reserve Bank of Australia expected to raise interest rates by potentially another 25 basis points at its next meeting. So that would take the cash rate then up to 3.35, which is still pretty low compared with global rates. But certainly the Australian economy is still pushing on at a pretty good rate, really getting a pretty reasonable boost, obviously, from that China reopening and, the sort of demand for resources and minerals. Although as yet it's unclear what the latest sort of spat between China and the US will have on that sort of demand and supply, given the issues around this sort of weather balloon and shooting down of that. Now here in New Zealand, we did see ANZ reduce some of its longer term mortgage rates, which is obviously encouraging for the housing market, although house prices still continue to sort of fall, but certainly the rate of fall is starting to decrease. Potentially we're looking at sort of plateauing out and putting in a bit of a bottom here. And interesting to note, while house prices are still falling sort of year on year, if you look sort of back, 2 to 3 years, house prices are still well up on where they were sort of 2 to 3 years ago. Now, obviously, the recent poor weather has, a pretty major impact, especially on Auckland. Potentially that bill could be as much as $500 million. But what it does do also as well is just place further pressure on the housing market, because some of those houses now with red stickers, which means they're uninhabitable, and obviously people have to find fresh places to live. So, potentially demand for housing could start to increase again as you're starting to see that sort of kick through. But also as well, obviously, sort of international tourists coming back and, sort of working visas increasing, but also as well international students as well. And especially in the universities there. Now it'll be interesting to see what the Reserve Bank does later on this month. Most analysts still expect a rate hike, but will it be 25 basis points or 50? Because the OCR currently sitting at 425, so if you saw 25 basis points, that'll take it to 450. But if you did see a 50 basis point increase, that'll take it to 475. Now again, given that most analysts are looking for a peak of just over 5%, again, that would imply most of the heavy lifting has been done. So again, if you are looking for income options, plenty of alternatives available out there, and go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.